think I'll be graced with many more years on Earth. And I think the US dollar will be the world's reserve currency for the rest of my life. I think the hegemony of the US dollar will be called into question because of the idiotic imposition of US policies, the weaponization of the US currency. But I think, to quote Doug Casey, the dollar is the worst currency in the world, with the sole exception of all the others.
Yeah.
So I think the dollar will continue to do well if you measure it against other fiat currencies, which will do less well. But I think for Americans, or for foreigners who have chosen to denominate their lives in US dollars, that the maintenance of purchasing power in the US dollar will increasingly be challenged, not relative to the maintenance of purchasing power in Canadian dollars or euros, but in an absolute sense. And I think it's important for your listeners to understand the reasons why, with the caveat that it might be boring. It's arithmetic, not narrative. The measurement that people use in terms of the deterioration of the purchasing power of the US dollar is the CPI. That's the stated rate of inflation. And it's fiction. It's absolute fiction. They suggest to you that CPI as a measure of inflation, and maybe it is defined inflation, but it's no measure of the decline in purchasing power. Your listeners need to ask themselves, in the last 4 years, since 2000, where the CPI stated rate of inflation has varied between 2.4 and 2.7%. So let's call it 2.5% compounded. What's happened to the price of gasoline in 4 years? How about healthcare and health insurance? Mortgage interest rates have doubled. The price of groceries is a political issue. And of course, the CPI doesn't include tax. Have your taxes gone up in 4 years, Chris?
Yes.
I would suggest to you that for the basket of goods and services consumed by Chris Marcus or Rick Rule, that the purchasing power of the US dollar is declining by about 7.5% compounded. Here's the crux for the dollar. If they're paying you 4.2 in the US 10-year Treasury, in a currency that's declining by 7.5% a year, your savings are costing you. It is in circumstances over time where investors are concerned about the maintenance of their purchasing power in fiat instruments that gold does well.
Yeah.
If you look at the period 2000 to 2024, gold has kept pace with the deterioration of the purchasing power of the US dollar. One could say that gold isn't up from 253 to 2700. One could say that gold hasn't increased in price sevenfold, but rather that the dollar has deteriorated in terms of purchasing power sevenfold. And I think what you saw this year is the beginning of the realization, just the beginning of the realization of that calculus. I had anticipated that the silver market was broad enough that it could accommodate our demand in almost any size. And while the silver market is very, very, very broad, the silver market was then, and I would suggest is today, much more liquid, or much less liquid than you believe. While there's a lot of supply in places like private ownership by the Indian peasantry, that isn't good delivery silver. And in the case of the Sprott Physical Trust, we could only buy silver that was, in the LBME or in the COMEX good delivery form.
Right.
And we were having days when there was $50 million of inflow into our physical silver trust. No problem, says Rick. We clean out Toronto. Okay, we go to Montreal. Clean out Montreal. Interesting. Well, no problem. We go to Chicago. We clean out Chicago. This is becoming concerning. The market's front running us. We go to New York. We clean out New York. It turned out that London was ultimately able to accommodate us. But London wasn't able to accommodate us overnight, which is what we were used to. We were used to buying silver and having the silver go from somebody else's pile in a vault,
Right.
through a screen, to our pile in a vault. What happened was that we cleaned out all the piles until we ran into the final piles in London and Zurich, which accommodated us. I actually think that the young adherents to the silver squeeze were onto something. I think their problem was that they bought a long-term narrative and they took in short-term tactics. I actually believe that there are imbalances in the silver market, in particular between the physical market and the paper market. And that's what we ran into. There's tons of silver that trades every day in the physical markets. Some days, 100 times more silver transacts in the paper market than exists for good delivery in the physicals market. It was our bad fortune to run into that, literally. Chris said, we got through it, but it contributed to my baldness. You know, I think that the people who were interested in the arithmetic around the silver squeeze didn't understand that they needed to be persistent and tenacious. In other words, that the unraveling of the dichotomy between the physical market and the paper market could take 5 years to unwrap. And many of the youngsters who were involved in the silver squeeze had a much more limited time frame. They wanted it to happen in 5 weeks or 6 weeks. And I suspect that many of them employed much too much margin. If you're paying margin interest for 5 years, you know, if the event that you're hoping to participate in takes 5 years and you're paying 8% a year, you might not be early, you might be wrong.
Yeah.
If you're an interest payer. And I think that's what some of the youngsters in the silver squeeze ran into.
Partly,
Well, remember that a lot of the retail participation in the silver squeeze abdicated. They haven't held the silver for 5 years. When silver didn't meet their expectation, they liquidated in favor of meme stocks, in favor of Bitcoin, in favor of some other speculative asset. So 5 years would have involved them continuing to, in their parlance, stack. That didn't happen. They decided to take on the banks, and the banks kicked their ass. Let's get this straight. It doesn't change the equation. What the silver apes hope to cause to occur will be done by the market in the market's own time. It will take place, likely without the apes. I mean, the disconnect between the futures market and the physical market is as broad as it ever was. And the disconnect that we at Sprott faced, which is to say the temporary increase in demand relative to the system's ability to effectuate good delivery supply, is there. And we weren't big buyers. You'll recall that at that point in time, over the course of a year and a half, we probably accounted for $1.5 billion or $2 billion in demand. We were the players because we were the only instrument that took silver out of circulation. The ETFs ebbed and flowed on a daily basis. When the market replaces Sprott, which will happen, that really truly changes the equation. What happened at that point in time would have been accompanied by a liquidity squeeze, a market event like 2008.
Mhm.
It would have been game over. If you would have seen credit restricted in the futures market against good delivery failures in the cash market, it would have been game over. Now, understand that you wouldn't have had a short squeeze like you have in a fair market. The LBMA would have declared something called force majeure, and they wouldn't have demanded settlement in silver. They would have cash settled. And they, the exchange, would have determined the cash settlement price, just like they did in the tin market. So part of the premise around the silver squeeze, which suggests that we had a fair market in silver, that the exchange isn't controlled by the dealers in the exchange, is false. That notwithstanding, people would have made a lot of money.
Yeah.
Understand, too, that the failure to deliver didn't reflect overall physical inventories in the silver market. It involved good delivery, silver, the silver that is the stuff of the paper futures, and the inventory that is required for responsible investment vehicles like Sprott Physical Silver. Over time, if institutional demand and retail demand for silver continues, what you will see is a dishoarding of informal silver, silver held by living, breathing human beings in the Middle East and in South Asia, and the reintroduction of that silver into the formal system, provided it doesn't happen all at once, provided it happens over time. And I think that this process probably accelerates. You're seeing a conversion of informal silver to formal silver in China, as an example. I think really the possibility for a cataclysmic break really has to do with how rapidly the market would be challenged. We were a catalyst that challenged that market, Chris. And to be honest with you, a fairly small catalyst. The fact that $1.5 billion or $2 billion in net buying had that dramatic an impact on the physical good delivery silver market let me know just how leveraged the futures market was.